Friends, have you ever felt like you must make a profit no matter what? Like every trade has to make money. And that pressure becomes so strong that you start making decisions without thinking properly. And then, you take more risk than you should. Slowly it is no longer your strategy that controls your trades. It becomes the pressure to make money. And this is where a dangerous mistake begins. It is called pressing. When a trader stops understanding the market and starts trying to control it. Instead of going with the market, you try to force it. And that leads to losses again and again. Hello friends, welcome to the series of the Daily Trading Coach. Here we do not just learn charts, we build a strong trading mindset. Today's lesson is Lesson 15, Pressing. It is a mental state where the need to make profit becomes so strong that you forget discipline. You increase your risk. And in the end you hurt yourself. If you take trades in a hurry, try to catch every opportunity, or get stuck trying to recover losses, this video can change your thinking. So let's start. So what does pressing really mean? It means you want the market to move according to you, and you want it to happen quickly. Now think for a second. Is this how a professional trader thinks? Not at all. An experienced trader thinks very differently. They know they should trade only when the market gives a clear opportunity. They don't chase the market, they wait patiently for the right setup. But the pressing mindset teaches you something else. It tells you, no matter what happens, I have to make money from this trade. And this is where the real problem starts. Here's the irony. This habit of pressing is often seen in traders who are actually very talented and highly motivated. They have such a strong desire to win that they simply cannot accept a loss. And slowly this pushes them to make wrong decisions. They stop following discipline and start chasing results. If you really want to understand trading deeply, think of it like flying a fighter plane or playing chess. In both, aggression is important, but control is even more important. You need to know when to attack and when to step back. And this control does not come automatically. It comes from rules. When you start executing every trade with clear rules, like how much risk to take, where to place your stop loss, when to enter, and when to stay out of the market, over time these rules start building an automatic control system inside you. Just like a child learning good habits. At the beginning, they need to be reminded again and again. But with time, those habits become a part of their nature. The same thing happens in trading. When you follow rules, slowly those rules become your self-control. So always remember, pressing, trying to force profits, usually leads you toward bad decisions. But when you follow your rules, the market itself gives you the right opportunities. And if you ever feel stuck in that pressing mindset, just pause for a moment. Look at your rules again and ask yourself, is this trade really worth taking? Friends, good trading behavior always starts as a rule and slowly becomes a habit. In the beginning, every good trading practice like using a stop loss, avoiding overtrading and trading with the trend is just a rule. But when you follow them again and again, they turn into habits. And those habits become your biggest strengths. Because then you don't have to think every time what is right and what is wrong. You automatically do the right thing. Just imagine. If every time you had to fight yourself to place a stop loss or to avoid overtrading, all your energy would be wasted there. But when rules become habits, your mind and your energy can focus on what really matters, the market. And one of the biggest strengths of the human mind is this. It can automate things. Think about learning to drive. In the beginning, you have to think about every gear and every brake. But after some time, you do everything without thinking. Now the question is, how do we turn trading rules into habits? The answer is simple. Repetition. Practice again and again. Just like when we were kids, we were told again and again to brush our teeth every morning. At first, we needed reminders. But today, it is automatic. In the same way, when you apply your trading rules again and again, they slowly become a part of your system. And after that, you don't need motivation and you don't need reminders. This is the next level of trading mindset, where the right rules are so deeply built into you that you follow them without any extra effort. So friends, next time you sit down to trade, don't just make a plan. Repeat it so many times that it becomes your habit. Friends, trading is like a dance. You have to let the market lead, and your job is simply to understand its signals and move with it. But when we start pressing, we break this flow. We begin to guess the market, like now the price will go up or now it will fall. And when we take trades based on these assumptions, we often make wrong moves. The result? A small loss slowly turns into a bad habit. And that habit creates a chain of continuous losses. So sometimes, just one wrong mindset can turn your entire trading cycle negative. Now the question is, how do we avoid pressing? The answer is simple. Repeat your trading rules until they become your habit. Just like we brush our teeth every morning without even thinking, in the same way, before every trade you should automatically follow your rules. Before entering any trade, check your rules, decide your position size, and always place your stop loss. Repeat these basic steps again and again until they become automatic. Because in the market, stress, risk, and uncertainty will always be there. You cannot remove them completely. But when your decisions are based on strong habits and clear rules, you don't fall into panic or emotional decisions. And in reality, the traders who survive long term are not the ones chasing every trade. They are the ones who trade with discipline. Not the ones forcing profits, but the ones waiting for the right opportunity. So always remember, accept the flow of the market, be patient, wait for the right setup, and let go of the habit of forcing profits. Because this mindset is what takes you toward long-term success in trading. Many people believe that self-coaching is just about thinking positive, but the reality is very different. Self-coaching is a structured process. And in trading it means guiding your mind again and again in the right direction. Every day, before every trade. Now the question is, how do you actually do this in practice? Let's break it down step by step. Step 1. Create a clear list of your trading rules. You should have a clean written list of your most important rules. First comes risk management. How much capital you will use in one trade and how much loss you can tolerate. Then your break rules. If you face 2 or 3 losses in a row, will you take a pause? Next are your entry rules. What signals do you trade on, and do you wait for confirmation or not? And don't forget market preparation. What exactly do you check before taking any trade? Always remember, a rule cannot become a habit until it is clearly written in front of you. Step 2. Mentally rehearse your rules. Before the market opens each day, take a few minutes and visualize your rules. Close your eyes and imagine you are about to take a trade. Ask yourself, am I placing my stop loss correctly? If the market is sideways, am I avoiding entry? If I take a loss, can I stop myself from taking the next trade impulsively? Run this whole process in your mind like a real scene, as if you are actually in that moment. See yourself as a calm, focused and disciplined trader who is following every rule. Because the more detailed your visualization is, the faster these rules get deeply set in your mind and slowly become part of your muscle memory. Now let's understand this with a simple example. Let's say you have one rule. If you face 2 losses in a row, you will take a 30-minute break. Now before trading each day, you visualize this situation. You imagine that you take 2 losses. And after that you stay calm. You close your laptop, you drink some water, and you give yourself a 30-minute break. When you repeat this process in your mind again and again, slowly it becomes your mind's default response. So when the same situation happens in real trading, you don't have to overthink. You don't have to fight yourself. Your mind automatically takes the right action, and that too without stress. And that's the power of mental repetition and visualization. It turns your rules into automatic behavior, where your mind stops overthinking and starts reacting in the right way. So always remember, following rules is not a one-time action. It is a daily practice. And the more you repeat it, the more strong and automatic your trading mindset becomes. Now let's move to the next step. Midday is usually the time when the market slows down a bit. And this is the perfect moment to reset your mind, to calmly review your performance and to prepare yourself for the second half of the day. During this break, ask yourself a few simple questions. Did I follow my rules? Did I make any decisions in a hurry? Do I need to improve anything in my next trades? This kind of midday review protects you from impulsive trading and brings you back to the right track of discipline. Now let's understand how to apply this in your trading, practically. The easiest way is to turn your rule list into a checklist. And during every trading session, ask yourself simple questions, one by one. Did I follow my risk management? Yes or no? Did I overtrade? Yes or no? Did I take entry on the right signal? Yes or no? If you break any rule, don't ignore it. Write that rule on a small piece of paper and stick it near your monitor. Then make a commitment to yourself. Until the market closes, you will fully focus on that rule. For example, if you overtraded in the morning, then after that you should clearly see in front of you no overtrading. Only focus on quality setups. This small reminder can save you from impulsive decisions and keep your discipline strong. Now when the market closes, before ending your day, do a quick review. Ask yourself, did I place my stop loss properly? Did I force any trades? Was I calm and disciplined throughout the day? Evaluate each rule honestly. Tick the ones you followed, and the ones you didn't follow, make them your focus for the next day. For example, if you overtraded today, then tomorrow your only focus should be to trade only high-quality setups. These small daily habits slowly turn you into a disciplined and consistent trader. Always remember, trading is not just about charts and signals. It is a process of daily self-review and continuous improvement. When you review your rules every day, apply them consciously and keep improving yourself, that is when you build a high-level trading mindset. As Dr. Brett Steenbarger says, to become a successful trader, you first need to train your mind. And that starts with following the right rules. Now an important question. Should you try to follow all trading rules at once? The answer is no. If you try to remember too many rules, you will get confused and mentally tired. So start with just 3 important rules, the ones that help you survive in the market. First, entry rule. When will you take a trade? Only when you see a clear and valid signal. Second, position sizing rule. How much risk will you take in one trade? For example, you can decide to risk only 1% of your capital, or a fixed amount like 2000 rupees per trade. Third, exit rule. When will you take profit and when will you cut your loss? This means, before entering a trade, you should already know where you will exit. Now how do you apply these 3 rules daily? Very simple. Before every trade, either write them down or say them out loud. Because when you speak something, it goes deeper into your subconscious mind. And when you repeat these 3 things before every trade, you stop making impulsive decisions and start trading with clarity and control. So remember, you don't need to master everything at once. Start with just 3 rules. Entry, risk, and exit. Repeat them before every trade. Because this small habit can protect you from emotional trading and slowly move you toward consistent profitability. So friends, if you truly want to become consistent in trading, remember this. Success does not come from one big trade. It comes from small disciplined decisions that you make every single day. So from today, don't focus on finding the perfect trade. Focus on executing your trades perfectly. If you found this video helpful, make sure to hit the like button because your support motivates me to keep creating valuable content for you. And if you want to truly understand trading psychology and mindset, don't forget to subscribe to the channel because in this series we are not just learning trading. We are building the mindset of a successful trader. I will see you in the next video with another powerful lesson.